Hello, fellow traders. I'm excited to kick off our educational series today, and I want to thank all of you who participated by suggesting topics. After reviewing the request, one particular topic stood out to me, and I couldn't wait to delve into it. So, in this session, we will be exploring the topic as requested by one of you, and the topic is how to identify fake demand and supply zones at which we should not take trades. Now, myself, Srijit Kakar, and today is Friday, 23rd of June, 2023. And before we move ahead, let's get done with the basic formalities. So please ensure you people go through the disclosure, which talks about the representation, risk disclosure, risk involved in the market, and also about the copyrights. So the topic for today, as requested by one of you, is how to identify fake demand and supply zones at which we should not take trades. We value your inputs and want to make sure we cover the topics that interest you the most. That's why we are again inviting you to be a part of this incredible journey. All you need to do is head over to any of our videos comment section and share your suggestions for the topics you would love to explore. It could be anything related to trading. We are passionate about creating content that resonates with you, and each suggestion you make will be carefully noted down and considered. Keep those suggestions coming, and remember, your voice definitely matters. So stay tuned for our upcoming videos and be ready to explore a world of knowledge tailored just for you. So let's get started. Now, before we dive into the topic, let's clarify one important point. There's often a misconception about the existence of fake demand and supply zones. Now, the truth is, if price moves up, there has to be more demand, and if price moves down, there has to be more supply. And this cannot be faked since the orders have to be real, right, for the prices to move. However, what we need to focus on is the distinction between genuine demand supply and artificially created demand supply, which that aims to trap the traders. These deceptive zones commonly get created due to what is known as pump and dump scenarios. And now the question is not how to identify fake demand supply zones, since zones they always get created due to real orders, therefore they are always real. The question now is whether the demand supply was genuine or artificially created, right? And that is what we will be looking into. So when it comes to demand supply methodology, traders they often concentrate on assessing the quality of the zone by using a very mechanical scoring system known as boosters, or we can also call them as odd enhancers. This assessment involves considering various factors such as the freshness of the zone, the strength of the leg out, and many more. If a zone meets these criteria for quality, many demand and supply traders they use it in their trading decisions. However, this approach can be considered as half-baked because it overlooks an essential component, and that component is the probability factor. So the probability factor encompasses 6 different aspects that we need to examine and rate when assessing a demand or a supply zone. These aspects provide insight into the likelihood of a successful trade. One of the crucial aspects within the probability factor is the location of the zone. Evaluating the location can help us determine whether the demand or supply behind the zone is genuine or artificially created. Now, this is done by using multiple time frame analysis, and let's explore how the location impacts the authenticity of a demand or supply zone. And for this, we will take a recent example from Bank Nifty. So give me a minute. I will bring up the charts. So we'll look at a very simple example from Bank Nifty to understand this concept. Now, if you look at the chart, which I have here on the screen, you can see I have identified a demand area for us, which is a rally-based rally structure. The indicator is also identifying it for us. And if you go through the concept where we apply the quality boosters, I'll say most of the boosters or most of the odd enhancers will fall in place, which will make it as a nice high quality demand area. And this is what I was talking about just a few seconds ago, that whenever we are assessing these zones, most of the traders they only do it based on the quality of that zone, which is basically a half-baked process. Now, what I do is I have designed a process where when we are assessing a zone, we don't assess it just by looking at the quality. but we also try to understand the probability factor. And like I mentioned, there are six different aspects we look into, and out of those six different aspects, one of the aspect is the location, and that is what we will be touching upon today. Now, yes, I do have a demand area on the chart, and what I've done is I have done a replay. So what we'll be doing is we will be going into the future candle by candle, just to see how the price action got created eventually, and then we'll be understanding it with the understanding of the location. So if I just start going candle by candle in the future, right, what happened, you can, oops, my bad. I just straight away clicked on the end, so I don't have to click on the end. I'll have to go candle by candle. So again, let's give it a few seconds to load. Perfect. So now what we'll do is we'll go ahead candle by candle, right? And we'll also give the indicator in between sometimes, so that if new zones are getting formed, we can also see the formation of those zones. So you can see now some supplies are also getting formed. We also have this demand, which eventually got violated, but the supply definitely held for us. And if we keep going in the future, we again came into this area of supply, right? And let's keep moving forward, and you can see the very next day we started moving down. The first demand area, which was above, already got violated. Now the reason I'm not talking about this demand area is because most of you who know demand supply methodology would understand that this is a rally zone because of a gap. But if we come into the categorization of this zone would fall under the category of a novice gap, and we don't use zones which are novice gaps. So that is why this anyhow would not qualify based on our trade plan, which is where we probably would have shifted to the lower zone. So if I keep going forward again, let's wait for some more price action to happen. So you can see, yes, we definitely got a bounce off this area one time, and then you can see a lot of supply zones also got formed, which kept giving us some bounces. And if we just keep moving forward, you can see we again went to the zone above, we again touched it, we again started moving down again into the same supply zone. And let's keep moving forward. And okay, so I'll still have to go ahead, right? So we have some new supplies again getting formed. And what you can see here is that most of the supplies are now getting respected, but the demand zones have started getting violated. And eventually this one also got violated. Yes, it definitely gave us one bounce before it got violated. Now, I'll say this is not a textbook example of, the kind of price action I would have liked to show you, but it's a very beautiful example to understand the concept. Now, when somebody was buying here, right, it was a really nice demand area. Everything was perfect. In fact, you also saw that it gave us a really nice bounce. But you would have seen many times when I do the weekly analysis session on Sundays, I talk about, okay, it's a really nice looking demand area. It's a very nice looking supply area. But I'll not be surprised if you don't even get a bounce of this and prices, they straight away go from these areas of demand and supply. And those of you who have been following my sessions, you would have seen me saying this many, many times. So this is an example where we at least got a bounce. I would have loved to identify an example where, probably we didn't even have a bounce, but that would have taken a lot of time for me to scroll through a number of scripts and try to find an example. But yes, many times what can happen is you won't even get a single bounce. Prices will straight away go through those areas, and the zones will get violated, and that is the time we wonder, it's such a beautiful looking zone, why didn't we get even a single bounce off that zone? Why did prices straight away got away from that zone? So now what I'll do is I'll just change the color of the zone to a different color, so that when I go to a different time frame, I'll be able to locate what this zone was. So I'm just changing it to gray color. Now, if I change my time frame to a bigger time frame, let's say a weekly time frame, so what we can see is that when the prices almost entered the weekly supply area, that is the time this demand zone was getting created. So if you think about it, initially I was showing you that zone on a 60 minutes time frame. So this was a 60 minutes demand zone, and now we are hitting a weekly supply zone. So the bigger the time frame, the higher the weightage, and that is where this can give us an indication that the move to the upside was probably a area where the pump and dump might be happening. Maybe they wanted a lot of people to start buying. due to which they started pushing the prices higher so that a lot of buying starts coming into the market, and somebody can offload a lot of shares because now people are more interested in buying, and we are almost into a bigger time frame supply. And you can see that is what has started happening. We traded there for about 1 or 2 3 weeks, and now we have started moving down from that area of supply. So this is what can happen. But like I said, the demand and supply zones cannot be fake, right? The demand zones and supply zones, they always get created because of buy orders, because of sell orders, which is demand and supply. But whether that demand is authentic or whether that demand was artificially created, we can have a better understanding of it by using multiple time frame analysis. So if you go back, so as you saw, that by carefully assessing the location of a demand or a supply zone using multiple time frame analysis, we can gain insight into its authenticity. If the zone aligns with area of genuine market interest of previous buying or selling activity, it enhances the probability of the zone being valid and reliable. Now, example, in this case, we had a demand area, but that demand area was not aligning with the previous market interest of buyers, right? It was aligning with the previous market interest of sellers because we were closer to the supply area. And that is how we can enhance the probability of the zone, right? By understanding whether it is valid and reliable or not by comparing it with what has happened in the past on a bigger time frame. Now, remember, the location of demand or supply zone is just one aspect within the broader probability factor. Assessing all six aspects thoroughly allows us to make a more informed trading decision and increase the overall success rate of our trades. In conclusion, when utilizing demand supply methodology, it's vital to move beyond solely assessing the quality of the zone, evaluating the probability factor, which consists of six different aspects, including location, provides a more comprehensive analysis. And by carefully considering the location of a demand or supply zone and aligning it with areas of genuine market interest, we enhance our understanding of whether the demand or supply zone is authentic or artificially created. I hope this video sheds light on the importance of assessing the location aspect within the probability factor of demand supply methodology. Remember to incorporate this evaluation into your trading strategy to enhance your trading decisions. And if you're interested in diving deeper into the topic and learning all the quality and probability boosters, or we also call them as the odd enhancers, that can help you rate the zone more effectively, I invite you to check our comprehensive courses. You can visit www.surjitkakkar.com/info today to explore our courses and take your demand supply analysis to the next level. This link is also available in the description, and we believe in providing traders with the tools they need to succeed in the market. And our courses are designed to empower you with the knowledge and confidence to make informed trading decisions. Thank you for watching this video, and I appreciate your support. If you found this information valuable, please like and subscribe to our channel for more educational content. And remember, the key to success in trading lies in continuous learning and improvement. And before we end the session, let me also see what do we have in the chat box. I'll take some random queries and then we will be ending the session. So the first one is from Rangrez, and he says BTC analysis, please. So the analysis for different symbols, we do it during the Sunday weekly analysis session. So if you go through my YouTube channel, you will be able to find the last Sunday session where we definitely included BTC, and we'll also be doing it day after tomorrow, which is the next Sunday. So today's session is purely on the educational aspect. So please explain Forex analysis again. Today's session will not be getting into anything else but the topic we have on hand. But yes, if that is a topic suggestion that you want me to do a topic on Forex analysis, then what you can do is you can just post it as a comment on any of my videos. Like I already said, we are noting down all these topics and eventually we will be taking these topics. So that is where maybe sometime soon I'll be taking this as one of the topic. All right. please make intraday videos using demand and supply, like full analysis on stocks for intraday purpose. So Rohit, we already do that, and we do that during our POS Plus trading simulation sessions, where I share some trading ideas with the students, and to those trading ideas we apply the complete methodology. So you are most welcome to join that course, where you will be having access to two such sessions every week during your subscription period. All right, so please suggest a reliable indicator for trading as being a beginner. It's tough to trade without any indicator. So Rangresh, one thing which I'll add here is, if you talk about any of the indicators, see, the indicators, they only show you what has already happened in the past. So indicators, they do not indicate what is going to happen in the future. And that is where the challenge is, right? Most of the traders, they believe that indicator is indicating the future. It is not indicating the future, it is indicating what has already happened on the chart. So the sooner you start leaning against price action, the better it is going to be for you. And when we talk about demand and supply methodology, it is purely based on price action, and that is the advantage we have. If you have not seen the weekly analysis session, you can go through those weekly analysis session, where you will see that we are planning these areas of demand and supply well in advance. And when the prices, they come back into these areas of demand and supply, how do they react from these areas of demand and supply? And if that gives you the confidence in the strategy, yes, you can take the next step and you can learn the methodology. All right, so uh, perfect. Great. So that basically brings us to the end of today's session. Thank you so much for joining in. So until next time, happy trading, and see you probably on Sunday now, which is going to be the weekly analysis session. Until then, take care. Good night. Bye bye.